So when independent researchers say half of the South African middle class has evaporated, people need to take notice.
What are the strategies for protecting your wealth and your investments in an increasingly hostile environment in South Africa? I asked Magnus Heystek this question in a recent episode of my podcast, Solutions with David Ansara. If you enjoyed this extract from this longer conversation, you might want to check out the full-length discussion that's linked in the description below. Enjoy. Could you tell our viewers what are some of the benefits of going offshore?
David, good afternoon. And, I haven't always been such a strong advocate of offshore investing. Many years ago, I told people after, or even prior to 94, I said, now's a good time to put money into the country. I was very bullish at that time. And I can only speak to the facts. And for a very long time, there was no need for South Africans to consider offshore investing. The South African stock market, property market, bond market did extremely well from about 95 up to about 2007. We were one of the better performing stock markets in the world. So it wasn't a real issue for South Africans. They were making enough money. We had a major commodity boom. Our platinum mines, our gold mines, our coal mines, iron ore, etc., gave fantastic returns. In fact, money was flowing into the country. The rand strengthened to R5.50 at one stage. So, to tell people to take money offshore while the country was booming would have been counterproductive, and it wasn't necessary. However, from about 2010, 2011 onwards, I started seeing some signs in my tea leaves that started alerting me to consider some offshore diversification. And firstly, it was mostly dependent on what was happening in Wall Street and also in Silicon Valley. There was some tremendously exciting stuff happening in the United States. The technology boom started taking off, the biotechnology, and you could not avoid putting some money into that sector. We didn't have a technology sector. And the only way to get access to those very innovative sectors was, of course, to take some money offshore and put it into Amazon, Apple, Netflix, and et cetera, et cetera. So in the early stages of my so-called offshore recommendation, it was purely diversification and getting to be part of that very exciting stuff happening. Now, from about 2015, it became a bit more ominous, and there were some political factors starting to creep its way into my analysis and my forecast, especially after former President Zuma firing Nhlanhla Nene as finance minister, the 4-day special finance minister, and then the reappointment of Pravin Gordhan. I mean, that was a disaster as far as the foreign investors were concerned. And combined with a lot of negative stuff happening, one had to start saying to people, the numbers have changed, the fundamentals have changed, the macroeconomic picture looking poor. Get some money elsewhere to work for you to protect your global wealth. And that has been the case for the last 6 years. And fortunately for a lot of people who took that advice, they've managed to build offshore assets that are unprotected or uncorrelated to the South African market.
Enjoying this analysis? Click here to sign up for our 30-day free trial for more content from the CIA.
So Magnus, that's the stock market, but what about the property market? I saw a recent article by you on Biz News talking about the R1 trillion property collapse. Was that just a clickbait headline, or is there some substance to that?
Not at all. Not at all. I mean, at the same time, we're talking about the whole macroeconomic picture of South Africa was deteriorating very, very rapidly. Our GDP per capita was dropping, and consistently we started seeing that South Africa in international terms was getting poor. So you had the stock market, which was the more immediate impact. People, foreign investors, started taking their money out of the market, either the stock market or the bond market. But from about 2017, 2018, and even prior to that, we saw that the residential property market was moving sideways in rand terms, and in dollar terms, most definitely downwards. So if you look at the residential property market, it hasn't recovered to this day to the levels of 2007, 2008. So there was a nominal decline, and in real terms, a decline of about 25%. Added to that, if you look at the listed property sector, which had a tremendous run from about 2011 to 2016, around about that time, the market peaked. I mean, everybody was just making money hand over fist in our property market. I'm talking about our listed property market. But since then, due to oversupply, the increase in rates and taxes, the pressure on consumption expenditure, and a whole host of other factors, the returns of the listed property sector has been about 50 to 60%, in some cases 90%. And if you put a number to it, and you do the numbers whichever way you want to do it, you get very close to R1 trillion in losses, directly or indirectly, for owners of those property assets. I used in my article an example of one of the Liberty Life property funds that owns very prestigious shopping centers like Sandton City and Eastgate. And if you look at their fund fact sheets today, the valuations are down 50%. I mean, investors have lost 50% of what they were worth at the beginning of 2016, 2017. So not clickbait, that is what it has cost South African investors in rands and cents in the local property market. And I'm not even talking about the stock market. This is just pure bricks and mortar. And some of those listed entities today are worth 10 cents what they were worth 5 years ago. That is a humongous loss to owners of those assets.
Now, Magnus, what about the importance of diversification itself in terms of the principle of it? I think intuitively it makes sense to not have this concentration risk in South Africa, especially given all of the political and social headwinds that the country has experienced, particularly over the last month or so with the riots and looting in Natal. Why is it important to branch out into other markets and to spread your asset base?
Well, the old age investment principle, don't have all your eggs in one basket. And we have some cases, and I'm aware of some cases of people who were shopping center developers, and they only had shopping centers in KwaZulu-Natal, and they had their personal property in Natal, and they had maybe a beach house at Zimbabwe or wherever on the coastline. Now, that asset class of that individual or family or whatever it is has been affected very, very substantially, both in the real terms, if they were damaged, and also in the perception of what the real value is of those assets. That's just a prime example. And the same applies to South African investors who primarily have a listed instrument on the JSE via their pension fund, which, by the way, as I've written many, many times, has been one of the worst major stock markets in the world over the last 10 years. And in fact, in dollar terms, the JSE has grown by maybe 2% over that period of time. So it's shown no growth in dollar terms. Over 5 years, over 8 years, you've made no real money in rand terms in certain sectors. So, and in the meantime, the world has been experiencing a tremendous stock market boom and also a property market boom. And on a relative basis, it becomes an issue. You should try and protect your wealth on a global basis. And unfortunately, some of those predictions have come true in the sense that people have lost money in terms of the currency. They've lost money in terms of no growth on the stock market or pension fund. And now their property values are also being discounted between 50 and 90%. And we have figures now starting to come through from independent research companies like even the University of Cape Town, saying that half the middle class in South Africa has been wiped out. And now that should be a headline on most front pages of newspapers, but It's not. It's like the mainstream media wants to ignore it, but it has profound implications in terms of wealth creation, the ability to pay taxes, the ability to collect taxes, and what goes along with an affluent and prosperous middle class. So when independent researchers say half of the South African middle class has evaporated, people need to take notice.
Thanks for watching. If you enjoyed this analysis, why don't you check out the full discussion with Magnus Heystek? That's linked over here. I'd also appreciate it if you could subscribe to my other channel. That's linked over here. Do leave your thoughts in the comment section below. My name is David Ansara. This is the Center for Risk Analysis. Until next time, take care.